This is Smarter Cars, a podcast about autonomous vehicles.
This is the finish line. The Stanford racing team has made its way into the history books.
But the most important thing for me is, it actually doesn't matter who comes first. It matters that we as a community achieve it.
Early in a technology, a thousand flowers should bloom.
Welcome to Smarter Cars. This is your host, Michelle Kairouz. In today's episode, we interview Quin Garcia, a managing director at Autotech Ventures. Quin has a degree in applied economics and management from Cornell, where he was the leader of the Cornell hybrid electric vehicle team, and a master's degree in management science and automotive engineering from Stanford, where he worked at Stanford's Dynamic Design Lab developing autonomous vehicles. Quin, welcome to the show.
Thank you for having me.
Great. So you're a managing director at Autotech Ventures. Why don't you tell us a little bit about your fund and what you guys are working on?
Sure. We're a VC firm based here in Menlo Park that invests only in ground transportation related startup companies. So think things with tires that move people and goods along roads, and less so the actual vehicles themselves, and even more so all the services and software related to non-rail ground transportation. So nothing that flies, floats, or goes on rails, but rather things with tires. And we recently raised a $120 million fund to invest in startups from early stage through late stage, anywhere in the world in ground transport.
Terrific. Why did you choose to focus on ground transport?
Couple different reasons. So I personally, I've made it my career. It's my passion. All I want to do is ground transportation startups. I love this stuff. From a market perspective, it's an enormous empire that's undergoing disruption, right? So 100-year-old industry, and we say ground transportation as opposed to just automotive. Mm-hmm. So that includes, how do you buy these things? How do you sell them? How do you rent them, insure them, park them, repair them, share them, right? And this applies to cars, trucks, motorcycles, buses, all these different kinds of vehicles with tires. A lot of times the auto industry is referred to as being disrupted right now, but if you look at all these other ground transport segments of the value chain, they're also being disrupted. So it's a great time to be a VC when you're in a space that's undergoing really rapid change, and in this case, that rapid change is being driven by tech giants entering the space: Google, Apple, Amazon, Alibaba, etc., and startups gaining traction in the space, whether it be Lyft, Uber, Tesla, Waze, Mobileye, and so on and so forth.
Great. Well, let's talk a little bit about the autonomous vehicle space, maybe by starting with business models. It seems like the landscape is changing very quickly. As you mentioned, there's a lot of disruption going on. It seems like one of the first questions that companies are facing is the question of how much to build and how much to partner. It seems like a few companies are looking to build an autonomous vehicle from the ground up, Tesla, NIO, Zoox, maybe some others. And other companies are looking to partner to combine, existing automakers with a technology layer and perhaps also with a distribution platform like Lyft. It seems much harder to build the whole car, but do you think there's an advantage to these companies, building the whole car from scratch in this full stack approach? Or do you think it's better for companies to focus on the technology and then partner with traditional OEMs? I don't know if you have any thoughts on that.
Yeah, I do. I'll only speak for our firm and what we're interested in, whether it's better for Tesla's approach or Fisker's approach or Zoox or otherwise. That remains to be seen. I would say there's been very few car makers that have successfully emerged over the past couple decades here, especially car makers that started as startup companies. So it's a really tough business to get into. Right. As far as what attracts our firm, we tend to shy away from highly capital intensive business models that involve, for example, producing a whole vehicle or producing a whole battery pack, or even producing a whole full stack autonomous system. And full stack autonomous isn't even in the same ballpark in terms of capital intensity as producing a whole vehicle. So you can argue that it's mainly software and services. But we don't think that there's so many customers out there that are willing to buy full stack autonomous solutions to justify the number of startup companies and corporations that are actually developing all these full stack solutions. So we think it's possible that there will be other cruise automations or autos or automaticas that get acquired along the way. But we don't think that there's going to be, in the long term, let's say 10 different vendors of full stack autonomous solutions, because we just don't think that there's enough customer demand out there for that.
Right. And in terms of how that kind of a stack gets integrated into the car, if you're talking just about the technology layer, how does that fit in the current supply chain? Like, how should we be thinking about that? I know some folks, maybe Aurora or others, are talking about providing the hardware, the sensors, in addition to the AI, and kind of, as you say, putting together this package. How does that work if they want to integrate with the existing OEMs?
So we've taken a bit more of a picks and shovels approach to investing in the autonomous space, as opposed to the kind of full stack approach. And I'll explain what that means. So we invested into a company called DeepScale, that's based in Mountain View, that just does the perception portion of the stack. So sensor fusion perception systems for human-driven and autonomous vehicles. And one of the reasons why we made that investment is because we feel it's not only one of the largest problems, one of the most challenging problems in the whole autonomous stack to be solved, but it's also a problem that a lot of the incumbent players in the automotive industry don't have core competency in today. A lot of the automakers feel somewhat confident in their ability to do path planning, because they've been dealing with vehicle dynamics for decades, and they certainly know how to do actuation. But where they felt less comfortable is in perception and maybe to a lesser extent localization. So the perception portion of the stack is a big challenging problem that a lot of these customers don't feel like they can do themselves. And so we think there's a greater number of potential customers out there willing just to buy the perception portion of this. Does that make sense?
Yeah, and so who would the customer be? Would it be someone aggregating a technology layer, or would they sell directly to an OEM?
It can be either. So a company like DeepScale could sell as a tier 2 supplier into a tier 1 supplier, like say a Delphi or a Bosch or a Visteon or a Denso or an Autoliv, for example. Or there's cases where the OEM can demand it directly, and DeepScale can be a tier 1 supplier, supplying their sensor fusion software directly to that OEM. Both approaches we're seeing play out with their existing customers.
Right. And so that makes sense. I think I understand your thesis there, and I think what you're saying with respect to focusing more on individual components or pieces of the supply chain rather than the whole technology layer or the full stack, including the car. Do you think that there's going to be vertical integration at some point? I mean, we did see GM buy Cruise. Do you think other companies in this space will inevitably be bought, or that there'll be kind of freestanding companies that exist selling in at different places in the stack?
When we talk about the ecosystem of full stack startups, so those startups, I think you'd mentioned Aurora earlier. Zoox is a full stack automation startup that also happens to be producing a car and tends to be a TNC, transportation network company. So they're kind of combining, several different businesses all into one. But if you look at, say, Aurora or Nutonomy or Drive AI, these kinds of companies tend to just do the full stack without producing the rest of the vehicle. I do think that there's possibility that some of these full stack autonomous startups are going to be acquired over the coming years. Some of the higher flying ones, I do think could be acquired, and it probably will. But given the number of them that are out there, not everybody can be acquired, and so I think there will be a lot of attrition over the coming years as these companies either fail to meet some of their technical milestones, or as these companies fail to just garner enough interest from customers. If you start kind of looking at this oligopoly that is the auto industry, maybe there's 15 or 20 different automakers globally, and if you just start looking at each one individually and say, would they buy a full stack solution or not? As you go down the list, you probably find that it's the smaller, weaker of the automakers that are more likely willing to buy a full stack solution from a startup than some of the large players. So GM, well, they already acquired Cruise, so are they going to buy a full stack solution? Daimler views themselves as one of the strongest in ADAS in the world, so are they going to fully outsource it to a startup? If you go on and on down the list, you kind of rule out quite a few customers there.
Right. So I think the second question really gets at how these cars will be sold or distributed. Are we going to see unit sales of autonomous vehicles, or will there be a complete shift to mobility as a service where transportation is purchased by the miles traveled? Do you have a view on that, or do you think there's room for a variety of different distribution models?
Mm-hmm. I see a trend towards shared use in the long term. What does it look like in the medium term? Meaning, do we have some fully autonomous, let's call it level 4 or level 5 vehicles that are privately owned for a certain period? Yeah, I could see that. But I do see this increasing trend toward shared mobility. I think that vehicles will remain majority privately owned for the coming years as we transition from level 2 to level 3 into 4. But we'll see increasing penetration of shared vehicles over that same time frame, particularly in urban centers. You'll see more shared use than you will in rural areas.
What do you think the suburban and rural use case is for shared vehicles? When I think about autonomous taxis or rideshare that's autonomous, everyone's really focused on the urban experience. But is there a use case where a suburban family that currently has 2 cars in the driveway today gets rid of those and moves to solely shared vehicles?
I do think there's that case. I think that the engineering challenges of producing fully automated vehicles, meaning level 5 and level 4 vehicles, those challenges are greater in urban centers than they are out in the burbs. There aren't as many kind of incursions. There aren't as many traffic lights. There aren't as many pedestrians and all kinds of other things that autonomous vehicles need to perceive and navigate out in the suburbs. You can argue that the engineering challenges maybe are a little bit easier in less dense areas, but I think you can also argue that the economic case in urban centers is a little bit stronger for fully autonomous vehicles. There's a little bit more incentive to get rid of the driver in the urban centers, because that's where there's more collisions. There's greater challenges with traffic and parking, and there's also people with less time that they're willing to spend driving around, and typically more income in those urban centers.
Right. what about this idea of competition? You know, you mentioned that there's so sort of only so much need for some of the autonomous technology. There's been a bit of a narrative in the press lately that there's this frantic race to, develop autonomous vehicles, and that car makers are incentivized to sort of rush to market with this stuff. And we saw the criticism with Tesla over autopilot. Do you think that being first to market matters that much, particularly if you're talking about rideshare?
Mm-hmm.
How do you think that's going to play out?
I do think that being first to market with fully autonomous, level 5 basic vehicles that eliminate the driver is extremely important in rideshare, and I think it's probably more important there than it is to other players that aren't engaging as much in rideshare. The reason for that is that one of the largest costs in ride sharing is the cost of the driver. And so if you're able to eliminate that driver, you can have a huge economic advantage, a huge pricing advantage, and also operational advantage over your competitor. So if you look at, let's say, Uber and Lyft here in the U.S., and we're investors in Lyft, so clearly I'm biased toward Lyft. But when you look at those two players, I believe that of those two players, if one of them were to reach market with fully autonomous vehicles in mass, let's call it 6-9 months before the other, I think the one that reaches market first could decimate the other. There aren't too many scenarios where people say that Lyft could kill Uber, right? But I believe that is one such scenario. Remains to be seen how they'll play out, but that's why both Lyft and Uber have been pumping serious resources into autonomous, because it's an existential topic for them.
Yeah, I've never really viewed the car market as winner take all. But I think in the rideshare context, what you're saying is just the ability to compete on price is going to be so impacted by autonomy that there'll be a first mover advantage there.
Yes, and I also believe that whoever can come to market with a full level 5 vehicle can level the playing field, no pun intended. If you look at Uber and Lyft today, I think they have a significant head start over a lot of the incumbent and upstart automakers in terms of operating a rideshare network. But I believe that an automaker, whether it be Tesla or GM or otherwise, who's able to produce a level 5 vehicle, that's a pretty powerful tool that automaker could use to enter the rideshare market and potentially catch up to Uber and Lyft. Just talking about the U.S. market here, but I think the same holds true in many other markets, except for, of course, India, where I don't predict autonomous vehicles to come for several decades.
Right. So how many successful market participants do you think there would be for something like autonomous taxi or rideshare? Is there a limit there? Or, we have obviously lots of different car makers today. And when we think about cars selling units off of a lot, I don't think anybody thinks that there's just only a few, limited number of brands that can succeed. We have a pretty broad array of cars. How do you think about that with autonomous? Is it different for selling units, different for rideshare? How do you think that will play out?
Mm-hmm, mm-hmm. I either have the blessing or the curse to have a job that requires me to think in 10-year increments. Mm-hmm. So most funds are 10-year funds like ours, and I believe that full level 5 autonomy will not achieve mass penetration in this 10-year life of our fund. I think that it'll achieve minimal penetration. There may be a few, some pilots and some light penetration, but I don't think it's going to be the majority of the market. Maybe I sound like a curmudgeon or conservative type compared to some other people here in Silicon Valley, but that's my take. And so I don't think as much in the near term about what level 5 autonomy means, for example, for our investment into Lyft, because it's far enough out. If you think about even on a further time horizon beyond 10 years, I could see that the TNC world, the Lyft and Uber and Ola and Didi and these folks, I could see it looking and smelling a lot more like the airline industry. The airline industry started out with just a few players operating and generating healthy margins, and then the more the airline industry was deemed kind of a safety critical method of transportation for society, the more the government started regulating it. And the more the government started regulating it, the less attractive the margins became. And I could see ride sharing eventually transition in that direction. But again, luckily, I only have to think in 10-year increments. what happens to the value of our investment?
Right.
Then, so what's the number of? I think your original question was, what do we look like in terms of monopoly, duopoly, oligopoly? What are the number of large players that are out there operating as a function of time? I believe that will be a duopoly here in the U.S. for some years to come. But I do think that once level 5 arrives, that will be a reset of the market, and that could invite other players in. But I'm not sure just how many.
Right. So you mentioned your time horizon. So I guess I can take from that you think it's 10 years at least before we get any significant adoption of level 4 and level 5. Is that?
Level 4 is a lot easier. There's a very long tail of engineering problems that need to be solved between level 4 and level 5. And so I would probably give you a more bullish response if we were talking about level 4. But level 5, complete elimination of human intervention, I think is going to take a very long time, just because there's so many challenging corner cases that need to be worked out. But if we're talking about level 2 is already here, level 3 is here and on the way. Level 4, I think, is only a short step after that. So I could see level 4 coming within the next 10 years, but not so much level 5 in mass.
And do you think that level 4 vehicles then in the next 10 years will be incorporated into rideshare systems where, if you're from the consumer perspective, you call your Lyft or your Uber, and sometimes you get an automated vehicle and sometimes you get a human driver depending on where you're going or what the weather is?
Yes, I do. I do think that the ride-sharing firms will, as quickly as possible, integrate level 4 vehicles, and I believe that they'll have geofenced areas where they operate for a period, and they'll have humans there overseeing the vehicles until they find that the vehicles are operating reliably within that geofenced area, and they'll slowly but surely expand the different kind of the operating regime of the vehicles in a safe way. And I'm sure there'll be mishaps along the way that will result in setbacks, maybe for the industry or at least for that particular company. But I do think there will be that forward progress.
And how do you feel? You mentioned level 3. How do you feel about this question of full autonomy versus the more gradual approach of assisted driving technology sort of taking over more and more tasks? Are you comfortable with level 3 vehicles, or I think Google has more of the approach historically of saying we want to go only to level 4, and Tesla seems to be a little bit more in the graduated approach to assisted driving. How do you feel about that?
Mm-hmm. I probably subscribe to the church of graduation. I think that we will have a slow but sure progression across those different levels. As much as I'd love to see the jump directly to level 4 and level 5, I think that I think a lot of the pieces of the puzzle, whether they be regulatory or technological or otherwise, aren't quite ready for level 5. And I also see vehicle OEMs roadmaps already including level 3. So whether we believe that we should go directly to level 4, level 5 or not, we're going to get level 3 whether we whether we like it or not. And I do believe that there's quite a few automakers that are out there that are pretty well positioned and well experienced to solve a lot of the human-machine interface challenges associated with level 3. I think one of the the proponents of leapfrogging directly to level 4, level 5 claim that having human intervention in so many different scenarios is just inherently unsafe and can't be solved. But I think that there's a lot of HMI, human-machine interface, and human factors experts out there who would argue that those can be solved with enough development work.
Right. So for companies that are really focused on full autonomy, say level 4, level 5, how do you think about time to market for these startups? There's a lot of criticism in the press claiming that automakers are sort of overstating their ability to get autonomous vehicles on the road, and in reality, it's going to be, 10 or 20 years. And I guess from a consumer perspective, I'm not sure how we should think about that. But from an investor perspective, how do you think about companies? I mean, if it takes 8 or 10 years before there's any revenue, how are these companies going to survive?
Mm-hmm. I think a lot of them won't. I think we will see a lot of attrition in the autonomous vehicle startup space over the next couple years. The ones that can't secure enough funding or can't meet technical milestones or enough customers, I think are going to be struggling, and some will go under. Some might have comfortable acqui-hires, and I think some will thrive. The good thing about being a startup is you're willing to take greater risks because you don't have an enormous empire to lose like the automakers do. And so it seems reasonable to believe that we're going to see startups that are there pushing the boundaries and at the forefront, just kind of like Tesla has been pushing the boundaries amongst the large automakers in terms of rolling out new ADAS features that could be perceived as risky or, in quotes, unsafe.
Right. Turning to safety, how should the industry be thinking about and setting expectations around the safety of autonomous vehicles?
Mm-hmm. I'm a venture capitalist, and I don't work in the auto manufacturing business. A number of my LPs are in the auto manufacturing business, and so they would probably give you a much more educated response on how their industry should behave with respect to safety. That said, one topic I've been thinking about recently is the airline industry. And how the government, at least here in the U.S. and I believe in some other nations, has required the airline industry to collaborate on safety topics. They're required to share safety data because it's in the interest. The government feels that it's in the interest of society for them to do that.
Right.
I could envision a similar set of regulations emerging in the auto industry at some point with regard to safety data. I don't know when and I don't know how, but I could see that story playing out.
Right. It's interesting because there's, I think, a group of folks who feel that it's actually safer to keep the human driver involved, and that level 3 is actually going to result in more safety than level 4 and taking the human driver out of it. And then there are other folks who say, well, okay, if we get to level 4, level 5, how safe is safe enough? How are we going to judge as a society, what we're comfortable with? And, in the airline industry, I think we certainly expect there's going to be very few crashes. But it's interesting to think both as consumers and as, an investor for you, how are we going to get comfortable that these companies have achieved a level of safety that is sort of good enough?
Mm-hmm. I think that the U.S. government's actually on this topic has been really progressive and impressive. I've been pleased with the way federal government has treated the topic of autonomous vehicles, especially passenger cars. I was a little disappointed to see that what I believe is kind of a politically motivated exclusion of trucks from the recent legislation that was passed. Mm-hmm. But I get it. It's fine as long as we're moving in the right direction. But I do think that the government's been moving in the right direction for passenger cars. And one of the things that I read was that there's a kind of a burden of proof on the automakers who are going to be testing autonomous vehicles to show that that they're at least as good as human drivers, that they're actually at least as good as that. Maybe they're not perfect, and I think the government recognizes they don't need to be perfect for society to benefit, but they're at least better than humans. And I think that's all that we as a society can ask for. Yes, it's painful to say that people are going to die, so let's make it perfect so that nobody dies. But the alternative is to have 35,000 people per year die. Would you rather have 20,000 or would you rather have 35?
Right. Right. It's interesting because people say that when you drive in an automated vehicle, you suddenly appreciate what good drivers humans are and all the reasoning and things that go into human driving. But it seems like the test is not really one perfect human driver who's not drowsy, not distracted, not drunk, not angry, would that person be better than this automated vehicle? But overall, humans as a whole, which suffer from all these defects, and looking at the number of, crashes per mile driven, et cetera, I think that's a little bit of a difficult distinction for people to make. I think a lot of consumers think, of course I'm a better driver, of course humans can drive better. But then you look at the number of crashes and all of these other issues, and I think as a society we're going to have to sell that message effectively in order for there to be adoption of the technology.
Mm-hmm. We're better than average drivers most of the time.
Right. Exactly. Well, thanks so much for taking the time to talk with us today, Quin.
Yeah, you're very welcome. That was really fun.
Okay, it was great talking with you. Thanks.
Likewise. Thanks, Michelle.
Thanks again to Quin for joining us, and thanks to all of you for listening. If you enjoy the podcast, please subscribe on iTunes or wherever you listen to your podcasts. You can find the show notes for this episode and all of our episodes on our Smarter Cars publication at medium.com. Thanks for listening. We'll see you next time.